This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of Monday, June the 5th through Friday, June the 9th, 2023. Pretty quiet week, really. Next week, not so much. But for this week, not a lot of news to drive prices, and we saw that play out over the course of the week. Back on Monday, June the 5th, we took some time to look at some other things that are moving the precious metals. As you know, the dollar index is a big driver of COMEX gold prices on a daily basis as the computers buy and sell, one way back and forth like they do. Now, a big part of the dollar index is the euro currency, weighted about 57-58%. So it's no surprise that if gold goes up and the dollar goes down and vice versa, that actually gold goes up when the euro goes up. Just a weird world we live in, dominated by the HFT computers. One of the things that we discussed as the week began back on Monday, June the 5th. As the dollar index moves, well, the euro is moving. Euro being 57-58% weighted in that thing. And what you see here, now again, is a little bit of an anomaly. We talked about this a couple weeks ago. It's only been like this for about the last year. But you can clearly see a very obvious correlation between the euro in candlesticks and the price of COMEX gold as a blue line. Euro coming down and bottoming out in September and October. Euro rallying, of course, dollar going down, and gold tracking. And really, since in just the last 3 months, it's just like almost tick for tick. So we got, again, obviously, we want the dollar to roll over. Because by extension, that means the euro's going up. You see how these all connect. As you know, it's not all been sunshine and lollipops for the precious metals for the last few weeks. We wonder if maybe we're done, maybe we're not, maybe a higher low's been put in, maybe it hasn't. Actually, next week will go a long way toward determining that. One of the patterns you'll see in up or down moves are what are called flags, consolidation periods on the chart. There's a couple of them visible in silver from back in February and March during that pullback. Maybe a couple forming here too. So we look for things like this to try to figure out what the short-term trend is. And that's just one of the things we discussed back on Tuesday. The economy was stronger and all the other crap. Straight down for a couple of days in early February, just like straight down for a couple of days in early May. Comes down about a 45-degree angle, and then you see the two purple circles? Those are bear flags. Little flag, drops again. Little flag, drops again. Finally bottoms out in early March. Straight down, like I said, in May. Kind of goes down at a 45-degree angle. And you could say this little rally from 2270 to 24 last week was just a bear flag. It's trying to hold its 100-day moving average. The way to turn it into not a bear flag and just a higher low is we need to get above 24. So just like in gold, we need to get above 2,000. In silver, you got to get above 24. Wednesday the 7th brought this week's smash of gold prices on the news that the Bank of Canada had hiked their overnight money rate by 25 basis points. Many people thinking, well, that's a sign the Fed's going to hike next week. And so gold plunged on those rate hike expectations, painting a nasty red candle on the chart and maybe one of those flags that we've been talking about. Anyway, that was part of the discussion Wednesday, June the 7th. We talked about these flags yesterday and how they are potentially just simply bear flags. If you didn't listen to yesterday's podcast, what's your deal? Don't you listen every day for crying? Anyway, go back and listen to yesterday's podcast. We talked about this notion of flags on a chart. There are bear flags and there are bull flags. They're basically consolidation periods. A lot of times in a bear flag, it kind of goes up because the trend is down and vice versa. In a bull flag, you move up, you get pull back, consolidation. Okay? So we went through that on the silver and the GDX chart. You can clearly see them. Well, let me give you, we didn't really do so much on the gold chart, so let me give them to you. There are 3 things we got to talk about first. The purple circles, which are bear flags. In the previous downtrend in February and early March, there's clearly 2 of them, right? Then a little double bottom, bank crisis blows up, and off we go from 1840 to 2100 on August gold. Now here we are coming down, and clearly we just completed, sure looks at least like it, bear flag number 1. That may be the only one. Maybe we're double bottoming here at 1960. Maybe that's where we found a base. It would be logical. That was the support back there in late January. It's a perfectly logical place. However, I want to draw your attention to today's candle. If you look really close, that, my friend, is a reversal candle, an engulfing candle, an outside reversal day, whatever you want to call it. Today's high, 1986, higher than yesterday's high. Today's low, way down below yesterday's low. Engulfing yesterday's candle. Okay? You see several of these looking back on the chart. Anyway, that makes me want to think they're going to try to hit us more. And like I said, over the next 5 days, knowing, and I'm very confident, if the Fed does in fact hike, which I now expect them to do, that's going to be the low. Okay? Be the last time we'll have to worry about selling the rumor because there will be no more rumors of any more hikes. So if that's the case, they're going to try to suck in more shorts so that they can squeeze them. And as they do, where might gold stop? 1920 is the next rung down. That's the old all-time high from 2011. That is a perfectly logical place for price to bottom by next Wednesday. I hope not. Doesn't have to. Nothing would make me happier than to just simply go sideways between 1960 and, say, 1990 for the next 5 days and then go catapulting higher. That would be great. It would save you a lot of pain, frustration, angst, and anger. But after Wednesday's beating, Thursday saw prices recover with a very nice green candle in COMEX gold. A lot of that driven by a surge in initial jobless claims as all these white-collar layoffs we've been having in the U.S., people are coming off their severance packages and finally allowed to file for unemployment insurance. So jobless claims are the highest they've been since October of 2021. With that, the dollar index dumped, and that led the computers to buy COMEX gold and silver. Well, it's dumping from a significant point, that old dollar index. And as you can see on this chart, all these highs connect, and the dollar has spent the last 10 days trying to get through this trend line. Maybe it hasn't. And if that's the case, then maybe it's going to trend lower for the next couple of weeks, and that should hold some good news for the precious metals if it does. The POSX on the daily chart. And again, remember we were telling you, that's this thing off this point at 108, that's exactly where you should start that line, because what you can't see all the way back into September is how 108 had been support. So once it broke through 108 and that second big red candle in the early part of November, then it came back up and could get through 108. That's where you want to start that line, obviously. And then you connect it to the peak back there on March the 7th or whatever, and extend it down. And let's count these candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10! 2 weeks worth of candles. Unable to get through and close above that thing. And now today plunging, again, lowest close. I don't know, in what, 3 weeks? Okay. This continues to erode away, and you get back below 103, we're going to start talking about 102 and 101 again, and that will be good for us. So this was a very, very positive day, at least for us, in terms of the POSX. And as we wrap up the week on Friday, June the 9th, let's take a look at the weekly chart of COMEX silver. While gold's only up a little bit on the week, silver's having a very nice week and is going to paint a big, healthy green candle. There are many ways you can look at this chart, but one of them is with the pennant shown below. Is silver beginning to break out? Well, we won't know for sure unless it finally gets above 26 on a weekly closing basis. When it does, that ought to excite things a little bit and set us up for a move to 28 and a breakout of the entire flag in a move toward 30. That's coming at some point this year. When exactly, we don't know. We might get some answers next week. Going to be a very busy week for news. Not only get the latest inflation data in the U.S., retail sales, a lot of those regional Fed manufacturing indices, all kinds of data. But we also get the June FOMC. Will they hike one last time or will they not? I hope they do so we can get this over with. But we'll see. And we'll see what Powell has to say when he has his press conference. Lately, those press conferences have been very bullish time for the precious metals with big rallies while he's talking. So we'll see if that plays out on Wednesday as well. But for now, it's time to wrap up the week. It's kind of a nice quiet week, but next week won't be quiet. So I hope you're paying attention, and I hope you stop by TF Metals Report for all the best news and analysis of the precious metals and, hands down, the best online community of friendly, like-minded people all trying to help us each other get through the storm. TFMetalsReport.com. Only $15 a month. Please be sure to check us out. And please be sure to have a nice weekend. We'll have another one of these podcast highlight shows for you next week.